Alright guys, I'm just going to check on my phone here if I'm actually live, because I did a little bit of messing around with the settings, so I'm not entirely sure if I'm actually live right now. And it looks like I am. Okay, great. That's wonderful. What's going on, guys? Josh Baldwin here for Mad Money Millennial. In today's video, I just wanted to do something a little bit differently than the usual video that we usually put out. Typically, I talk about Social Security, SSI, SSDI, and SNAP or EBT benefits. In today's video, we're going to talk about the latest and greatest in finance news, all right? So what is going on with the general economy right now in the United States? So I wanted to start off the video talking about the Consumer Price Index report that came out today, the inflation CPI report for July that everyone has been very looking forward to, because it is a very huge determinant in what is going to happen with the future of the US economy going forward from here. Over the past few months, as you know, we've suffered very, very large amounts of inflationary pressure, large amounts of inflation that they called transitory, but now it's becoming very, very apparent that it's not transitory, it's here to stay. But we are seeing very, very interesting reverberations going on in the stock market as a result. So for all of you investors out there that are putting their money into the stock market, I'm sure this is a very exciting time for you. And if you're not investing already, still a very exciting time for you. So without further ado, I'm just going to get into the first of many of these live videos where we're going to talk about the general economy and the general state of finance news going on in the United States. All right, so let's begin. So prices that consumers pay for a variety of goods and services rose 8.5% in July from a year ago, a slowing pace from the previous month due largely to a drop in gasoline prices. So the reason that we actually saw a slight drop in inflation this quarter with today's report was because the lowering of energy prices has begun to appear. Okay, so that's most apparent with gasoline prices. So on a monthly basis, prices were flat as energy prices broadly declined 4.6%, and gasoline fell 7.7%. So that's a very welcoming and friendly change that we've had since our skyrocketing gas prices that we've been suffering the past few months. So that offset a 1.1% monthly gain in food prices and a 0.5% increase in shelter costs. Okay, so that's housing. Economists surveyed by Dow Jones were expecting headline CPI to increase to 8.7%. So a lot of economists were actually thinking the opposite was going to happen, and that we were going to actually have more inflation coming out in today's July inflation report. So yeah, the Dow Jones was expecting a headline CPI to increase to 8.7% on an annual basis and a 0.2% monthly basis, although it came in actually lower than expected in today's report. Okay, so in today's video, like I said, we're going to discuss a brand new breaking news update, just talking about the general state of economy and where things are going, instead of the usual benefits information that I typically discuss. So I'm going to talk about the general state of the economy in the United States, how that can affect you how that can affect you guys as taxpayers. So the goal of this new video series is to hopefully become sort of a friendly alternative to stations such as CNBC or Bloomberg News, which tends to be very repetitive and get into a lot of the same topics that were discussed previously throughout the whole day. So hopefully these videos are a nice condensed version of what you typically see on those other stations. And I promise you these new videos will become a lot more interesting as I begin to learn what finance topics you guys are most curious about, you guys are most curious to hear about. But for now, I plan on talking about things such as investing, real estate, the stock market, inflation like today's video, and other bigger and broader finance topics. All right, so By the way, if you're interested in investing, which is what I'm going to be starting to talk about, then I encourage you to click the link in the description to sign up for a Robinhood account, all right? And once you do that, you'll receive a free stock, all right? So that's one stock absolutely free. So it's literally like free money. So go ahead and do that if you haven't already. Or if you're thinking about investing, make sure to sign up through that link, get your one free stock. Continue to watch my videos and educate yourself on finance and as well as other channels, of course. And once you get comfortable, then you can join me in investing. I'm actually very excited to start talking about things like investing, since these are topics that I personally find very interesting and enjoy reading about on a consistent basis. And don't worry, I will still be making videos about Social Security and SNAP benefits on a weekly basis as well. So this is just going to be incorporated in with the other videos now on a weekly basis as well. In fact, the YouTube algorithm will most likely actually not promote this video at all, since my channel is currently tailored to Social Security and SNAP-related videos at this time. But my hope is that you folks begin to start to enjoy some of these videos and ideally find them relevant and informational as well. But for now, you can do me a giant favor by tapping those like and subscribe buttons. And let's get into this video on today's July inflation report, which came in at 8.5%, much lower than expected as a result of the recent slump in energy prices. Now, excluding volatile food and energy prices, so-called core CPI rose 5.9% annually and 0.3% monthly, compared to respective estimates of 6.1% and 0.5%. Even with the lower than expected numbers, inflation pressures remained strong. The jump in the food index put the 12-month increase to 10.9%, the fastest pace since May 1979. Butter is up 26.4% over the past year. Eggs have surged 38%, and coffee is up more than 20%. So that really sucks for you coffee drinkers. That includes myself. Despite the monthly drop in the energy index, electricity prices rose 1.6% and were up 15.2% from a year ago. The energy index rose 32.9% from a year ago. Used vehicle prices posted a 0.4% monthly decline, while apparel prices, that includes clothes, also fell, easing 0.1%, and transportation services were off 0.5% as airline fares fell 1.8% for the month and 7.8% from a year ago. So pretty much everything is starting to start to decline up from its peak inflationary value. So things are starting to move in the right direction. That's a quote from Aneta Markowska, chief economist at Jefferies. This is the most encouraging report we've had in quite some time. The report was good news for workers who saw a 0.5% monthly increase in real wages. So everyone's wages have actually been going up steadily, so that's a good thing. Inflation-adjusted average hourly earnings were still down 3% from a year ago. Shelter costs, which make up about 1/3 of the CPI weighting, so that's housing, consists of 1/3 of the CPI index, continue to rise and are up 5.7% over the past 12 months. Okay, so rents have steadily been increasing pretty much across the board. I'm sure a lot of you are aware of that as you pay your rent each month. The numbers indicate that inflation pressures are easing somewhat. Okay, so that's the numbers that we've been seeing going down, but still remain near their highest levels since the early 1980s. So inflation is still very, very high for the time that we're in right now. So it hasn't been that high since the 1980s. Clogged supply chains, outsized demand for goods over services, and trillions of dollars in pandemic-related fiscal and monetary stimulus have combined to create an environment of high prices and slow economic growth that has bedeviled policymakers. So, as you know, a lot of this inflation was caused by the huge printing of money that we did over the past 2 years as a result of the pandemic. So these were all the stimulus checks that you saw coming out. But now that it's been a while since we've issued one of those stimulus checks, we are starting to see inflation come down. Wages are up, so people have a little bit more money in their pockets, and they're able to spend more money. So that's why we see consumer spending easing just a little bit, but not too much. So we see things like high gas prices. That's obviously stopping people from going out and spending a ton of money. But wages are still higher, so people that offset is in there to allow people to continue spending. So where was I? The July drop in gas prices has provided some hope after prices at the pump after it rose past $5 a gallon. So that's what I was just talking about. But gasoline was still up 44% from a year ago, and fuel and oil increased 75.6% on an annual basis, despite an 11% decline in July. So even though it's been down over this past month, it's still very, very high, obviously, as you see from when you go and fill up your gas. Federal Reserve officials are using a recipe of interest rate increases and related monetary policy tightening in hopes of beating back inflation numbers running well ahead of their 2% long-run target. So the government is stepping in and trying to do their very best with the reform policies and power that they have to limit this inflation as well. The central bank has hiked benchmark borrowing rates by 2.25 percentage points so far in 2022, and officials have provided strong indications that more increases are coming. So the Fed is still steadily increasing rates every few weeks or so. So the last one that we saw was the 75-point basis hike. We may see another one of those coming in the next few months as well. There are some good news earlier this week when a New York Fed survey indicated that consumers have pared back inflation expectations for the future. So people are actually enthusiastic that inflation is coming down now. People have more money in their pockets, and they're able to just feel a little bit more comfortable and less pressure from all of the purchasing power reductions that have been going on as a result of this inflation. So while inflation has been accelerating, gross domestic product declined for the first 2 quarters of 2022. The combination of slow growth and rising prices is associated with stagflation. So while the other 2 straight quarters of negative GDP meets a widely held definition of recession. So you see a lot of things going on in the news, or a lot of people in the news talking about a recession. This is a recession. I know a lot of people in the news are trying to redefine what a recession means, but the technical definition of a recession is 2 consecutive quarters of GDP decline, of which we have seen. So even though we are seeing a dip and a sort of a lip in the stock market, so we're seeing actually a recovery in prices, we are still technically in a recession, but it's not one that is going to hurt as badly as previous ones. This is actually somewhat of a rich recession, or a sort of not rich recession, but a recession in which we have had more money. We've had more money than ever before. So ever since 2019, wages have been increasing at a faster rate, faster than we've ever increased wages before. So that, coupled with high inflation, it means we're still generally okay. We still, like I was saying before, we have higher wages to offset the reductions in purchasing power that occur as a result of inflation. This is what I was talking about before. Wednesday's inflation numbers could take some heat off of the Fed. So inflation numbers coming in less than expected today actually took some of the pressure off of the Fed to stop raising rates as much. So people are seeing that even though they're raising rates to counterbalance inflation and to lower it, it's still the fact that inflation came in less than expected today instead of higher than expected. That basically means that the Fed what the Fed is doing with these rate hikes is actually doing a good job for the economy and is actually doing what it's intended to do and lower inflation for the US as a whole. Now, following the CPI report, market pricing reversed. Okay, so over the past few days, we had a rally in the market, and then we saw a slight dip as people were worried about what was going to happen with the report that came out today. People were worried that inflation was going to come in higher than expected, not lower than expected. So that is why instead of seeing a further decline in prices, as like we saw yesterday, with yesterday's after a 3-day rally, it started to go down yesterday in the stock market. It's actually starting to lip back up again and start to rally again because of that report that just came out today, which positively affirmed that we are seeing inflation start to come down. All right, guys. So I hope you found this video helpful. If you did, please leave a like. Don't forget to sign up for your Robinhood account using the link in the description to get your 1 free stock. And of course, hit that subscribe button and notification bell right next to it. Hitting that bell will make sure you get notified exactly when my videos are coming out and not a week or 2 later. And lastly, if you'd like to support my channel, you can now own your very own original Mad Money Millennial t-shirt, which you can also get in the link down in the description. Colors come in black, gray, red, and white. And like I said, the link is down in the description if you're interested in buying a t-shirt. All right, guys. I will see you guys in the next live video. Thank you guys so much for sitting through this and watching this with me. I really, really appreciate it. And I'm absolutely sure that these videos are going to get better and better. So thank you guys so much for the support. Stay safe, stay hustling, and I will talk to you guys again soon.